Hey everybody, it's Annie Williams and Ryan Edwards. We're Real Estate in Auburn with Berkshire Hathaway Home Services Preferred Real Estate in Auburn, Alabama. Real Estate in Auburn, and we just wanted to continue with our series of introducing you guys to people in the community that we work with and the community in general. But today we have Matt Gregg with CrossCountry Mortgage with us today, and Matt's been a lifelong Auburn resident. We've worked with him for a long time, and we asked him to come give us some updates as far as what he sees with the lending side of real estate. So thank you for being here.
Thank y'all for having me.
Yep, absolutely. I know Ryan's got some questions that he wanted to ask you, and so we really appreciate you being here and your opinion on everything.
Yes, ma'am. Yeah, thank you for being here. We appreciate it. But just want to kind of get into it. So the number one question that we get from buyers is, what's going to happen with the interest rate? So a lot of people want to know when to lock in and what the future holds for that. So what's your take on that?
With locking in interest rates, if you're comfortable with the numbers, I would say go ahead and lock. The risk to reward is really not there. The main thing you're risking is your payment going up. You get a little bit higher interest rate, and then you'll be kicking yourself on down the line, spending $20 or $30 extra a month when you could have just locked in right then.
So y'all are seeing rates on the rise.
They are.
Yeah.
Rates are on the rise, and they're changing every day, if not every few hours.
Mm-hmm.
So how long can someone lock in their rate without essentially being penalized with a higher interest rate? Or
you're going to have a different pricing for each one. Now your rate's not necessarily going to change. So say that you are buying points, you may pay a little bit more to lock that in for 60 days. Most of the time we'll just work it in. But now once, we can lock out to 270 days, and in those circumstances you will be paying a little extra to get that rate.
To keep that rate
Exactly.
for that down. Okay,
Yes.
so that makes sense, yeah.
And that's more on the new construction side.
Mm-hmm. One of the things that we were talking about that really makes a difference in this market being as tight as it is and as competitive as it is the importance of working with a lender that's, number one, local, but number two, that's respected in the community. And so I know that when I bring somebody an offer, or if we're the listing agents and we receive an offer, asking who that lender is, and if it's Matt Gregg on the other end, people feel good about that. So we appreciate that.
Yes.
But what other questions do you
yes,
have?
absolutely. And to kind of reiterate that does make a big difference. If for yours, for the buyer's sanity, for our sanity, for the attorney's sanity, everybody just getting everything done and knowing that it's going to be handled, having a local lender is huge. It's definitely a big deal.
Very big part of the process. But yeah.
On the lending side, local lenders know exactly who they're working with.
Right.
I can pick up the phone, call the attorney, they know who I am, they know exactly what file we're working on.
Mm-hmm.
So I can see where that definitely helps y'all out.
Mm-hmm.
Yeah, and you're dealing with the same person. When we have deals with other large lenders or online lenders, every time we call, it's somebody, we're dealing with somebody different. So being able to call you, have your cell phone number, and deal with the same person throughout the transaction makes things a whole lot easier.
Yeah, and again, sellers are more interested in working with that because they know that we all live in this community and everybody has a vested interest in moving things forward together. And
yeah, especially in this market when it is so competitive,
Mm-hmm.
that could be the one deciding factor if it's a multiple offer situation.
absolutely,
So,
yeah. What other questions did you have?
Gotten a lot of questions lately on FHA loans. So can you talk a little bit about FHA, some of the advantages to FHA and some of the disadvantages to FHA?
Okay, FHA is a federal housing administration loan. Down payment's going to be 3.5%. PMI will be on there the life of the loan. Another disadvantage is when you take that offer into a multiple offer situation.
Yeah.
Sellers will be more likely to pick a conventional offer if everything is the same. A big reason is because FHA appraisals. They're not as lenient as on the conventional side.
Mm-hmm.
So the condition of the house does matter.
Mm-hmm. We've seen that with VA and FHA, where
Yes.
even if it's something that the buyer would accept, the appraiser dictates that a seller has to make certain repairs, and a seller then will look at an offer, like you said, that's a conventional loan higher than maybe an FHA or VA. So not all the time, but we have seen it be less competitive.
Yes,
Yeah.
ma'am. And on my side, I've seen peeling paint on
Right.
an outdoor shed
Right.
have to be fixed in order to get a passing appraisal.
Yeah, and another negative too is those aren't negotiable repairs. So
Right.
if an FHA appraiser comes and says this has to be done, in order for the loan to close, it's got to be done.
Exactly.
And
So,
we've seen a little bit, been some creativity with making those things work. So it's not the end all be all, but it's just you are going to be looked at more strongly if you've got a conventional
Yes.
offer in hand.
how is an FHA rate different from a traditional 30-year conventional rate?
Sometimes they can be lower, and especially with the lower credit scores. FHA, say you have a 620 credit score. Your rate on the conventional side will be a lot higher than your FHA rate with a 620.
See, would you say the biggest advantage for an FHA is the 3% or 3.5% down payment?
It is, and then going to the lower credit scores with that lower interest rate.
I think the bottom line too is, again, get with somebody, a lender that somebody can trust, to give them all the options and show them all the details so that they can compare.
Yes, ma'am.
Yeah, for sure. Yeah.
Yeah, and I would assume you would be happy to do that. If anybody had any questions, they could call
Thank
you, talk to you, and kind of go over the different types of programs. Because there is a lot of, it's not just conventional FHA or VA, there's a lot of different options you could go with from a financing standpoint, and you could talk people through that and help them out.
Exactly. There are hundreds of different products, and each one of them has their individual niche. But yes, they can call me anytime, weekdays, weekends, and we can get them taken care of.
Good deal.
One of the things that I've really appreciated is you having the heart of a teacher. You're not just trying to sell somebody a loan, you're trying to get them the right loan product for what they're doing. And we really appreciate that. It makes a big difference.
Yeah.
Just like y'all, clients become family and friends, and it's the same way on my side.
Really, yeah.
Keep in touch with them. If anything goes wrong, I'm always there to help.
Right.
If they need anything outside of the loan, they can always call me.
We appreciate that.
Yeah, definitely.
Any other questions that you have for Matt?
One question I did want to ask you was, so I'm sure everybody knows that the market is crazy right now. There's lots of multiple offers, there's a shortage of inventory. Have you seen anything in the last 6 months, year, or anything that has changed as far as the process to get approved for a loan? I mean, is it harder to get now versus 2 years ago? Is it easier to get? Have there been any major changes just as far as the whole application
That's a good
process?
question.
Over the last few years, there haven't been a whole lot of changes. One big change would be student loans. A few years ago, it was just 1% of the outstanding balance if it was in forbearance or it had a deferment on it. Now, FHA and Freddie Mac, they will accept 0.5%. So that in turn raises your buying power. DTI ratio, if it was real tight, now you can afford that $300,000 house that you used to not be able to.
So you're saying it's actually probably easier to get qualified today than it was 6 months, year ago?
Yes, ma'am.
Yeah, okay.
Yes, ma'am.
Yeah, I think a lot of people don't realize that.
Yeah.
Yeah.
Has COVID changed anything as far as the process goes?
When COVID hit, there were a few extra guidelines put in, especially with self-employed borrowers.
Right.
They have recently dropped those extra few steps. So now we're back to the normal process prior to COVID.
That's
Okay.
good.
Yeah, that's
It's nice to be back to normal.
Yeah, great.
Yeah. I know one of the things you and I were talking about before we sat down was the bubble. And a lot of people are asking, are we in a bubble? Things like that. But one of the things that we've kind of been talking through is that if you're looking at rental rates and it's still typically more cost effective to purchase.
Yes, ma'am.
But yeah, so we were saying if you have a rental payment of $2,000 a month, and you're spending $24,000 a year, then the market would have to drop very significantly for you to lose that money.
Yes, ma'am.
And there's still a tax credit for primary residents on the interest, right?
On the mortgage interest.
Yeah.
You'll get a tax statement at the end of every year to file with your tax returns.
Right. You'll have a rule of thumb on closing costs amount that people should plan for. I know it
I
depends on
throw
the
out,
loan.
it depends on the loan amount. Lower loan amounts, the percentage is gonna be higher.
Right.
Just because of the fixed cost. Higher loan amounts, they'd be lower in that scenario, but I throw out 3%.
Mm-hmm.
And sellers can pay some of that. On conventional loan, if you don't put 20% down, sellers can pay 3%. FHA is 6%.
Well, Matt, we appreciate you coming today. This has been very helpful.
Thank y'all.
Yes, thank you.
Absolutely. Always glad to see you. But we just wanted to thank you for coming and thank everybody for watching. And if you have any other questions, feel free to reach out to us, or we're going to give Matt's contact information so that you can have it. But we can't stress enough the importance of dealing with a local lender. It just will make all the difference in the world, and working with somebody that has a heart of a teacher. So, but thank y'all again for tuning in, and we look forward to seeing you next time.
Yep, thanks guys.
Thank y'all.